So you're looking for ways to diversify and get access to commercial real estate, and you've heard about EquityMultiple. Well, in this video, I'm going to be laying out a full picture of what it is that EquityMultiple provides, an explanation of the features and benefits that EquityMultiple users have at their disposal, and what you absolutely must know before deciding whether EquityMultiple is right for you, so make sure you stick around. And if at any point during the video you want to sign up for EquityMultiple, they've agreed to give you guys an exclusive 1% return boost on your investments. All you have to do is use that link in the description below. So diving right into things, what actually is EquityMultiple? Well, they were founded in 2015 with the mission of making investing in private commercial real estate easy, accessible, and transparent. The big benefits to this asset class is that it has low correlation to stocks and bonds. It's got lower volatility than stocks and public REITs, and they're able to target very strong risk-adjusted returns. So in essence, they are a commercial real estate investment and technology company that provides investors access to professionally managed private real estate transactions. All of this from a team that has decades of experience in commercial real estate to protect you and optimize return. They handle the deal sourcing, the underwriting, and the asset management so that you can invest in minutes while EquityMultiple's experienced investors work on maximizing your returns. They've currently got over 48,000 investors across the US, and they are a very investor-first company, meaning that your needs come first. As of January 2024, EquityMultiple has closed over 280 real estate investments, and EquityMultiple investors have participated in real estate projects accounting for over $5.2 billion in total capitalization. And from all of that, they've paid out over $425 million in distributions to investors. So now that you have a sense of what EquityMultiple actually is, let's dive into the platform and how it works. So the first thing to note is that there's going to be 3 different types of investments you can make on EquityMultiple. These are going to vary based on your risk tolerance, your investment timeline, and your objectives going into things. The first of these is called Keep and refers to their Alpine Note investment vehicle. Now, this is essentially a yield-focused cash management tool. So for funds that you want, kind of sitting on the sidelines, but still readily accessible, that is the use case of this product. It's going to have the shortest hold periods on the platform with the highest levels of liquidity. And essentially how this works on the back end is it's used as a line of credit that EquityMultiple can tap into for their other real estate investments. So a little bit later, we'll get into what those look like, but essentially this is a pool of money that you are lending to EquityMultiple, and in return, they're paying you a yield for that. This essentially allows them to go to deal sponsors with more leverage, get access to higher quality deals, and make sure things don't fall through. They can also use these funds to, pre-fund a deal before it goes live on the platform to, again, just make sure that things are moving along quickly and closing faster. With Keep, you're going to be able to choose from either a 3, 6, or 9-month duration, which currently have APYs of 6%, 7.05%, and 7.4% respectively. The interest on these also does compound on a monthly basis, which helps to accelerate your returns a little bit more. Now, a nice feature about Keep is that you can actually redeem your investment early and move it to another EquityMultiple investment. So if a new, investment opportunity comes online on the platform, you've got funds in Keep and you'd rather, invest in this new opportunity, that is something that EquityMultiple makes it very easy to do. A big thing to note here is that there are no fees on the Keep product. So because you're essentially lending this money to EquityMultiple, there's nobody else involved and no fees need to be charged, which is pretty unique when it comes to any kind of, crowdfunding real estate platform. Pretty much everywhere you go, you're going to be looking at fees. So to have a no fee option here, pretty unique. Keep's also got a very strong track record with over 50 series of notes products launched and over $160 million of participation. Over 1,400 investors have participated in Keep, and EquityMultiple has met all payment and funding obligations with no missed or late payments. So this is not a brand new product. This is something that has been, going on for a while, and EquityMultiple has been consistently making all their payments. Then, as icing on the cake, they also provide you with something called first loss protection. So whenever they're issuing a new series of these notes, EquityMultiple is essentially purchasing a small portion of them. Then if a default were to occur with any of these notes, EquityMultiple's notes are only going to receive payments once all the other notes have been made full and interest has been paid. Now, the next EquityMultiple product is called Earn. And within this bucket, you're going to find commercial real estate investments offering near-term income. In this category, there are going to be debt investments, equity investments, and fund options that you can invest in. Let's dive into a little bit more detail on what each of these looks like now. So an example opportunity in the debt bucket from EquityMultiple is the Express Car Wash, which I'll put on screen right now. Essentially what we're looking at here is a $6.8 million senior mortgage loan for construction of a new Flo's Express Car Wash located on a main thoroughfare close to LA. It's in a pretty strategic location. There's a lot of traffic, not a lot of competition. And so they're going in, pooling money to put a loan together to allow this place to be built. This particular deal has a 24-month term with a potential 12-month extension and is targeting a 14% return. EquityMultiple also has a really successful track record when it comes to car washes in particular, with past rates of return looking at about 20%. When it comes to the equity opportunities in this bucket, one example we can look at is the Captiva Club Apartments. This is essentially a large multifamily complex in Tampa, Florida, where EquityMultiple is going in alongside some other investors. They're making some renovations, they're modernizing some of the units, and their hope is to eventually turn it around and sell it. The target term here is 36 months with 2 potential 1-year extensions that they can choose to take advantage of if they need to, again, just depending on how long these renovations take. So typically in the equity bucket here, they're looking at some kind of value add where they can increase the income that a particular project is generating and in turn pass that along to investors. Then on the fund side of things, they currently offer something called the Ascent Income Fund. This is going to offer you diversified exposure to US commercial real estate loans. More specifically, this fund focuses on senior debt investments in middle market, where EquityMultiple believes they have the greatest opportunity. This is about a $2 million fund currently, and you're able to access liquidity after a year. And the last bucket we're looking at is Grow, which offers commercial real estate investments with the most total growth potential. Here we're also looking at a variety of different asset classes, from multifamily, industrial, hotel. There's a whole bunch of different areas that EquityMultiple really specializes in here. And typically these are either going to be completely new builds or renovations where EquityMultiple again feels like they can go in, add some value, and turn it around for a profit. These are not going to be as income focused though, and are generally going to have a timeline of anywhere from about 3 to 5 years. Now across this category, the target returns and time horizons are going to vary, and due to legal reasons, you're going to have to make an account yourself and go in to see exactly what those numbers look like on a deal by deal basis. Now I want to dive into a couple more highlights of the platform before we get into what you absolutely must know before deciding whether or not to use EquityMultiple. One pretty exciting piece of recent news is that EquityMultiple recently closed a strategic investment with Marcus & Millichap. This is one of the largest commercial real estate investment firms in the entire country and opens up a lot of new exciting opportunities for EquityMultiple and their investors. This includes things like access to more investment opportunities, more in-depth data and research for investors, and abilities for operational expansion. Given their investor-first approach, EquityMultiple also has industry-leading customer support, which can be really important when you're investing tens of thousands of dollars or more into an investment. You're going to want to be able to, get a hold of somebody should something come up. And then you're also working with a very easy to navigate website with full transparency into all deals. So you don't have to be an expert in real estate to understand these deals, understand how they work, and what their objectives are. So far so good, but now let's dive into what you really need to know about the platform. First, they're only open to accredited investors. This means that you either have to have over $200,000 per year of annual income if you're single, $300,000 if you're married, or you need to have a net worth of $1 million or more, excluding your primary residence. If you don't meet either of these criteria, then unfortunately you're not going to currently be able to use EquityMultiple to invest. The next requirement is that there is a $5,000 minimum investment. This will allow you access to the Alpine note, but for the other investments we discussed, those minimums are going to vary anywhere from typically $10,000 to $20,000. So all I have to say, this isn't the platform for somebody who just wants to dip their toes into real estate investing. You're going to need to have a decent chunk of change ready to go here. Now, another really important thing to dive into are the fees that you're going to be looking at on this platform, because there can be a few of them depending on which investment vehicle you're working with. Now, the deal sponsors are going to pay fees as well, and for them it's going to be a flat 3%. Then for the investors, depends on which particular deals you are going to move forward with. With the Alpine note, like we discussed earlier, that's going to be a no fee investment. However, all other offerings on EquityMultiple are going to charge you some kind of fees. Let's dive into those right now. First, with common equity deals, there's going to be an annual monitoring fee of anywhere from 0.5% to 1.5% generally. With these deals, EquityMultiple typically also holds holds a profit participation, but that's only going to kick in after you've received a full return of your invested principal and the IRR hurdle is achieved. This back-end method of compensation helps EquityMultiple to align their incentives with investors, and it helps them offer generally low fees across the board. With debt and preferred equity deals, generally you're going to be looking at a 1% servicing fee. With funds, there's going to be an origination fee, which is going to vary from deal to deal, but will be specified in the deal offerings on the website. And with all of their offerings, there's typically going to be a yearly administration expense, which basically just covers filing all the paperwork, sending you your tax documents, and making sure that all the T's are crossed and the I's are dotted. This gets split up between all investors and typically works out to about $30 to $70 a year. So all things considered, these fees are pretty on par and even a little bit lower than many of the other crowd-funded real estate investment platforms out there. Now, the next thing you're going to have to know about EquityMultiple is that there is no guarantee of a return, and any investment on the platform has the potential to go to zero. And that's after EquityMultiple's strict due diligence, which results in them accepting fewer than 5% of the investment opportunities that apply to be listed on the platform. But you have to know that when investing in any kind of real estate project, there are a lot of different risk factors to consider, and every opportunity is going to be very, very different. This is also a very illiquid investment that you really should be prepared to hold for at least 3 to 5 years at minimum. Now, if you do want to sell early or try to get some liquidity on your investments, EquityMultiple says they'll help you out with that, but there's no guarantee that they're going to be able to find a buyer on the other end. And then lastly, they've got some negative reviews that you're going to want to be aware of. Most of these have to do with either tax documents coming in late or folks' investments going down in value, which is kind of inevitable. But after coming through most of these, I didn't notice anything particularly noteworthy in the negative reviews. So knowing all that, who is EquityMultiple for? Well, the simple answer is accredited investors looking for a way to diversify their portfolios into commercial real estate. You've got to be someone who's willing to invest a significant chunk of change, talking $10,000 plus. You're going to have to be willing to tie that money up for a number of years. But if that's you, the potential for high returns that EquityMultiple offers, along with their relatively low fees, could make this an attractive option for you to try out. And again, if you want to do so, you can use that link in the description below to get that 1% return boost exclusive to my audience. Thank you so much for watching, and I'll see you in the next video.